which does lead me into, I apologize in advance, but a slightly more painful topic for you both, around investing mistakes. Again in our little technical issue break there, we got talking about one of the investment mistakes that you made a few years ago in a company that probably quite a few people will be familiar with if they've followed some of the super investors that we follow, the Guy Spears and Mona Proprietors, and also learning from someone like Phil Town. Are you happy to share that story of what happened there and maybe some learnings?
Yeah, absolutely. Yeah, Samantha and I were invested in Horsehead. We followed a few great investors into it. We definitely were cloning them, and still we did a lot of research. We thought it was a great investment. I still look at that investment and think, well, how did that not pay off?
Mm-hmm.
It was Horsehead was a zinc producer that was building this amazing zinc refining plant. I think in North Carolina. They were the low cost producer. This was going to cut their costs in half. Zinc was at a very low price, so you could make some reasonable assumptions that zinc could approach cyclical highs, and that they got this plant off the ground and cut their cost basis, and that this investment could 10x. And I think we also came across this at a time. It would have been only maybe that year that we had this conversation at the pool where we said, let's really work on our investing. Let's retire. Let's do some things. And we probably forgot one of our biggest rules, which was not to go all in on a single investment, and
to not get emotional, because we were greedy. We were like, oh my God, if this pans out the way we think, we could be retired next year, not in 5 years, and we just let emotions take over.
Yeah, and obviously they went into Chapter 11, and
we
shareholders
lost all of our money.
So it is a painful thing. Yeah, my Sirius XM radio investment just went. so you say the wall of fame and the wall of shame, they're right next to each other. But I'll be honest, it was a great lesson for us to learn. There is no get rich quick scheme in investing. It's not a safe thing, so it's a lot about positioning and allocation of capital, and not putting all your
eggs in one basket.
Mm-hmm. Yeah,
no matter what Warren Buffett says.
yeah. What's the Buffett quote? It's something like, "It's okay to put
all your eggs in one basket and then watch that basket.
Just watch the basket very closely." Yeah, exactly. It's it's an interesting one because I've listened to Phil Town has a podcast episode for anyone that hasn't heard it on Horsehead, and I've listened to that a couple of times, and I try to put myself in, I guess, the shoes that you were in at the time of trying to analyze Horsehead as a potential investment. And I think I probably would have invested in it and made the same mistake, to be perfectly honest, even knowing how it panned out. I guess it's the whole idea of investing being a game of probabilities, and occasionally things come out of left field when, even all the stars do seem to align. And I guess that's the reason why we have limits in terms of portfolio allocation and so on. And I believe it was, maybe it wasn't this company. I think it was Horsehead though, where Monish Pabrai got this call from Charlie Munger after reading Monish's letter, basically debriefing on what happened with Horsehead, and he told him something along the lines of, learn from it, but don't learn too much. I guess, in other words, it's a mistake. It happens. It's kind of par for the course. And I've had investments like that where I've lost a little bit of money before, and I still come away from a lot of those things kind of thinking that I would make that same bet again if it was presented to me. Do you have similar takeaways from that, or are there key things that you think you just genuinely missed that should have been picked up?
No, I think the investment thesis was sound. Saying that, but I think it was just the position size. It's something we should, we really are limiting ourselves to 10% at the most, with a highly, with a lot of conviction. That's as much of our portfolio as we would put into any one position, and that's a lot for us. And this was well over that.
Yeah.
And again, it was we wanted to change our life so quickly, and we thought this could potentially be it. Because I think
we thought it was a golden ticket.
Yeah, we easily thought it could 10x. And it was really down to this refining plant they had in North Carolina getting up and running. and it just had some teething problems very early on, and it really they had their debt called, and a fairly aggressive hedge fund owned most of their debt, and their assets were marked down on their balance sheet, and then basically there was nothing left when the primary debt lender got paid. So shareholders lost everything. But and it's been too painful for us to actually go back and see as a private company how Horsehead is doing. They're probably doing very well.
They're probably doing great. That hedge fund is probably real happy.
Right. So Horsehead's still around. It's come out of bankruptcy, and it's the new plant's operational. Is it?
Well, I think so. I don't know. Haven't. It's a little bit of a.
We're still bitter. It's still salty for us.
Fair enough. Yeah, it's interesting, like how these things play out. I guess the lesson coming out of that is portfolio allocation, and it's. I think people hear, the old Warren Buffett talks where he says, if I was only managing $1 million, I'd have 50% of my best idea, and I'd be making 50% a year. And I've been reading The Snowball. I'm not sure if you guys have read that or not, the Warren Buffett biography, but some of the stories of stocks that he was able to purchase, and that, like he was buying, I think in one example, he had about 50 or 60% of his portfolio in one stock, but it was trading at like 0.5 times earnings or something like that.
Right.
So that's the environment where Buffett was talking about making 50% bets. It's not, paying 10 times sales for some new software company that's growing really fast.
Exactly.
So yeah. And unfortunately, the three of us aren't Warren Buffett either. So we probably have to scale things down, right?
Isn't that lame? I wish we were.
We can dream. So, switching tack a little bit, hopefully onto a slightly more positive subject. Tell us about what your plans are with YouTube. I